Welcome back. Today we bring you the 4 biggest stories that you won't want to miss. First, a massive update. Caroline Ellison and a third member of FTX were charged by the federal government. Find out who. Next, Sam Bankman-fried, the founder of FTX, is seeking bail in the United States after a swift plane ride north. Then we explore the connection between the collapse of FTX and the fall of Terra Luna. How are they related? And finally, the latest on the Shiba Inu countdown. Someone was on the naughty list. Caroline, quick to point fingers? The founders of FTX, a cryptocurrency trading platform, and Alameda Research, a quantitative trading firm, are facing federal charges for conspiracy to commit wire and securities fraud, commodities fraud, and money laundering. Gary Wang, co-founder of FTX, and Caroline Ellison, former CEO of Alameda Research, have both pleaded guilty to federal charges in the Southern District of New York. Wang pleaded guilty to conspiracy to commit wire fraud, conspiracy to commit commodities fraud, and conspiracy to commit securities fraud. Ellison pleaded guilty to 2 counts of wire fraud, 2 counts of conspiracy to commit wire fraud, conspiracy to commit commodities fraud, conspiracy to commit securities fraud, and conspiracy to commit money laundering. These charges were announced on the same night that former FTX CEO Sam Bankman-fried was traveling from the Bahamas to New York, where he is facing 8 federal criminal charges from the same prosecutors who accepted plea deals from Wang and Ellison. The plea agreements for Wang and Ellison were signed on Monday, the day that Bankman-fried was originally supposed to return to the U.S. before a court hearing in the Bahamas turned chaotic. Sam Bankman-fried, former CEO of FTX, was arrested last week in the Bahamas and faces extradition to the U.S., where he has been indicted on 8 federal criminal charges in the Southern District of New York. The Commodities Future Trading Commission, or CFTC, and Securities and Exchange Commission, or the SEC, have also released civil complaints against Bankman-fried, as well as Gary Wang and Caroline Ellison, who have both pleaded guilty to federal charges in the Southern District of New York. The SEC alleges that the 3 individuals were involved in a, quote, multi-year scheme to defraud equity investors in FTX, the crypto trading platform co-founded by Samuel Bankman-fried and Wang. The CFTC's complaint charges Ellison with fraud and material misrepresentations in connection with the sale of digital asset commodities in interstate commerce, and charges Wang with fraud in connection with the sale of digital asset commodities in interstate commerce. Ellison has been singled out in the SEC complaint for engaging in artificial manipulation of FTT, which is FTX's self-issued token, in order to boost Alameda Research's available collateral for lending. Alameda Research has been linked to loans from major crypto firms, including Voyager Digital and BlockFi Lending, that have since filed for bankruptcy protection. The SEC has stated that both Ellison and Wang are cooperating with the agency's ongoing investigation. According to the SEC, Gary Wang, co-founder of FTX, created a software backdoor in the company's platform, which allowed Alameda Research, led by former FTX CEO Sam Bankman-fried, to divert customer funds for its own trades. The SEC alleges that Bankman-fried and Wang gave Alameda and Caroline Ellison, who became co-CEO of Alameda alongside Sam Trabucco in 2021, carte blanche to use FTX customer assets for Alameda's trading operations and for whatever other purposes Bankman-fried and Ellison saw fit. Trabucco, who joined Alameda in or around 2019, according to the SEC, was not mentioned in connection with any wrongdoing. As this shocking news continues to unfold, it remains to be seen how the legal proceedings against the founders of FTX and Alameda Research will play out. These federal charges, including conspiracy to commit wire and securities fraud, commodities fraud, and money laundering, are serious and could have significant consequences for all parties involved. The fact that Gary Wang and Caroline Ellison have already pleaded guilty adds an extra layer of complexity to the situation. Stay tuned to our channel for all the latest updates on this story and join the conversation in the comments below. Sam Bankman-fried, bail for Christmas? Sam Bankman-fried, the founder of now-defunct cryptocurrency trading platform FTX, has reportedly asked to be released on bail while awaiting trial on 8 charges of fraud and conspiracy. Bankman-fried was extradited to the United States from the Bahamas, where he was previously denied bail and held in Fox Hill Correctional Facility in Nassau. It's not yet clear what the terms of his potential bail arrangement would be or whether it will be approved by the court. FTX made headlines earlier this year when it was revealed that the company allegedly misused billions of dollars in customer funds, leading to its Chapter 11 bankruptcy filing. Bankman-fried, once a billionaire, has become a central figure in what has been called one of the biggest financial frauds in American history by prosecutors. As the case against Bankman-fried and FTX continues, the outcome for the former crypto mogul and his troubled platform remains uncertain. The bail hearing is scheduled to take place in Manhattan, and the decision will depend on various factors, including the nature of the charges, Bankman-Fried's criminal history, and his potential risk of flight. As the case against Bankman-Fried and FTX continues to unfold, it remains to be seen what the ultimate outcome will be for the former crypto mogul and his friends. One thing is certain, however, this is a case that will be closely watched by those in the financial and cryptocurrency industries. Did you lose money due to the collapse of FTX? Share your thoughts with us in the comments. Welcome to Crypto Inquiry, where we bring you the latest crypto news to keep you informed on important topics and changes. Nothing is meant as financial advice, and as always, do your own research. Terra Luna collapse, the start of the end? The collapse of FTX, a once successful cryptocurrency exchange, has left many people wondering what happened to the missing $8 billion in customer funds. Some experts believe that the Terra USD stablecoin, which has been compared to a Ponzi scheme, may have played a part in the chain reaction financial crisis that led to the downfall of both FTX and Alameda Research, the hedge fund started by FTX founder Sam Bankman-fried. Blockchain analytics firm Nansen has been tracking transactions recorded on the blockchain to uncover the truth about the FTX's missing billions. According to Nansen researcher Nicholas Polk, after Terra USD collapsed, hundreds of millions of dollars in cryptocurrency were transferred from FTX to major crypto lenders. The CFTC alleges that a significant portion of the lost customer deposits were used to cover risky bets and debts for Alameda Research, despite the two companies being supposed to operate separately. Nansen found evidence that the two companies were closely entwined, with Alameda using FTX's funds as an unlimited line of credit. Alameda was the only account on the platform that was allowed to have a negative balance, according to the CFTC. Bankman-Fried has claimed that the commingling of funds between Alameda and FTX was unintentional, but the CFTC alleges that he and others at Alameda were aware of the commingling and used it to their advantage. The collapse of Terra USD in May 2021 had a domino effect on the cryptocurrency ecosystem, resulting in the loss of over $400 billion in revenue. As an algorithmic stablecoin, Terra USD relied on code, market activity, and belief to maintain its peg to the US dollar, and its stability was called into question due to its reliance on another currency, Luna. In the wake of Terra USD's collapse, both FTX and Alameda have reported significant losses. It's unclear at this point how much of FTX's missing $8 billion can be traced back to the collapse of Terra USD and Alameda's risky bets. With Caroline Ellison as CEO of Alameda Research, it's natural to wonder about her involvement in the fall of Terra USD. Was it another risky bet that backfired? Share your thoughts with us in the comments below. Shiba Inu's countdown, a letdown? The Shiba Inu or SHIB community was left disappointed after the website of the second largest meme coin was redesigned by developers instead of a highly anticipated launch of the Shibarium Layer 2 scaling solution. The countdown on the website had led SHIB holders to believe that the launch of Shibarium was imminent, but it was only revealed to be for the redesign of the website. Despite the excitement surrounding the launch, leading Satoshi Kasuma, the project head of Shiba Inu, to apologize to the community for the misunderstanding. The launch of SHIBArmy is crucial for the growth of Shiba Inu, as it aims to scale the meme coin and reduce congestion on the Ethereum blockchain. This could have a positive impact on both SHIB and BONE tokens within the ecosystem. In the past 2 weeks alone, Shiba Inu has gained 10,410 new holders, according to data from Etherscan.io, highlighting the significant interest in the project. It remains to be seen when the Shibarium solution will be made available to the community, but it remains to be a highly anticipated event for SHIB holders. Did you feel let down by the SHIB team? Leave a comment below. And if you enjoyed the video, please consider subscribing and check out the video on the screen. See you next time.